Hello friends and welcome to Intense Thoughts. So I've had a lot of comments from people describing their difficulties with stock trading, and I certainly feel for you in those difficulties. People who have said they've stayed up a lot and had sleepless nights, and people who have struggled to have profitability, people who have been uncertain about what the trend is, and a whole host of things. So I certainly feel that. I have had my own irregular path in trading, so I do appreciate that, and you certainly are not experiencing anything unique if that is the case, because most people are having trouble with stock investing. Most people in stock investing are not profitable. It is not generally a profitable endeavor, so it is rare to have sustained profitability, and it is difficult even seeing things that look like they work to get it in your head in the right way so that you can apply it in trading. But today we're going to talk about something that could help that somewhat. I said that I was going to talk about torque and leverage in a past video. So we're going to talk about torque and leverage in this as it applies to the stock market. This is an application of what you could call natural law. Natural law is that phrase that lots of people like to use but never explain, and I'm not sure that most of them even know what it means. But natural law means that if you see it in the world, it should apply in the stock market. So in this case, we're going to talk about a concept called torque. And someone already made a slide here, so we'll just read their slide here, slideplayer.com, the law of gravity and rotational motion. Torque is a vector quantity, and the direction is perpendicular to the plane determined by the position vector and the force. So if you turn it counterclockwise, torque is positive. If you turn it clockwise, or to the right in this case, the torque will be negative. Now, how do we apply that? Well, let's look at this in a more practical way here. Here is a brake on a train, and if you were trying to stop a train, you would have to pull back on this old hand brake that looks like it might snap off like it does in some of the cartoons, but it looks like it is certainly an old locomotive hand brake, but this would be pulled to stop the train. Here is a hand brake in a car. This is a manual transmission, so pulling this hand brake applies pressure, probably to the rear tires only, by a cable, and as you pull it up, it applies more and more pressure, and so the car stops. But the one that you probably know the best in terms of this is the joystick. So if you relate this to flying an airplane, which I've never flown an airplane, but maybe in a flight simulator I've flown an airplane, when you pull back on the stick, the nose points up and the plane goes up. When you push forward on the stick, the nose points down and the plane goes down. Okay? So in that case, this we should be able to apply to the stock market. So I have done that here on the SPX, and let us see what we find out. Well, the way that I am looking at this is as a determination of pressures and trend. Okay, so when you see pressures changing in the stock market, you should see change of trend. So we know this was the COVID crash, 2020, and I just want to show pressures from that point. All right, so here, as we are rising out, we see similar in a rising pattern. We see something that goes forward where we push forward and we have a sideways action. So let's say that we came here off the low, and we could just go into the past. You can start from any point you want, but I started here. So here, what we see is we were rising strongly and we got a tipping forward. Now, that's even forward relative to where we were during the COVID crash, the total crash. You can see that the force was applied clockwise or to the right, and it's having the effect of slowing down the motion of the acceleration of the stock market. When we come over here, we get at our new high an acceleration where we are pulling back on the stick because we went from the high to the low. We are pulling back on the stick, and we start to see that the market is rising. So we have these cycles giving us information of what the market is doing. We can see if we continue, we have our flat once we have our bottom. So what this is showing us is the force or the momentum, not the momentum, but the force that is being applied to the market to change its inertia. According to Isaac Newton, on the motion of bodies in orbit, you've probably heard this, that it says that basically bodies in motion progress unless something external hinders it. So bodies in motion tend to stay in motion unless they are acted upon by some kind of an outside force. So if the market is going up, something has to change its direction. Something. And that something is a force that gets applied to the market. And you can see this force, that when you get this lower candle, you're seeing a sideways force until you get a change of that force. So we can see a second force here. We've got a second force and we have our sideways until we have our rising force. So you can see that as the market gets larger forces, they stick around for a longer time and have a larger effect. Smaller forces come in and they change the course of the trend in a smaller way. So here's our really large trend that we're coming up. And we start accelerating this slowly from where we were, pulling back relative to this original decline. And we do continue to pull back. So if we go here, we can compare this to our original decline here from the COVID crash, and we see that we are relatively bullish by comparison. I don't remember where I had the line. And we continue that. We do not then tip over. We actually accelerate that force just a little bit. And so we continue up. And you can see the smaller forces, or even smaller cycles, you might say, trying to hinder this force and trying to change it. And so we get this different chop. But what it shows is that it is not just higher highs and higher lows that are affecting the trend. It is also the angle of the highs and the lows relative, and I messed this one up maybe, but it's also the angle of the highs and the lows as they relate to each other. That is giving us an idea of forces. Let us look here at this triangle pattern. We can see that we had, obviously we're in this larger uptrend, we can see that we tipped forward here, and then we got a larger bullish resumption. This was a pullback in comparison to this smaller one, and this one's also a larger candle with a higher low and also a higher high. If we were to break this down, we tipped over here. Let's just break this down and go smaller. We'll say it's like this. I know these are harder to see now, but like this and this. So relatively, this second one here is more bullish than this first one. And so we get an acceleration to the top. We hit the top of the triangle, and now we tip over, but then we start changing and applying force counterclockwise, which is positive force, and the trend, it breaks out of the triangle going up. And we have our major uptrend. We continue in our uptrend here with this force, so we're still maintaining the same force, but less than the original that caused us to go up in the impulse. And so we start to flatten out the trend, but we're still bullish. Even to right here, we're still bullish. You see, we are starting to tip forward, which is not completely invalidating the trend completely, but you see we are flattening, and then we get our large sell-off because we are tipping forward. It's also worth noting that when you basically go vertical, you can't tip forward any further than vertical. So that's the end of a specific little component cycle. And you have to then look for your next one to go bullish, which I would suppose is like that. And then, obviously, we continue pulling back. We go from here to here, and we go from here to here. And you can see how the forces keep getting applied in the market relative to torque that ended. So I showed you that with the triangle. Let's continue to some more here. See more examples. We're pulling back and going up. As we tip forward, we're getting ready to dump and go down. So just on this simple basis, we get a tremendous amount of information about what the future trend should be. We're comparing them to each other in relative sizes. Obviously, a very small cycle, it's going to take a couple of positive small cycles to change this trend. You have to keep hitting it with more and more force. And you're not doing it like if you see here, this is a larger stop. This stop stops this upward force. This is the force that gives us the upward top. And then we finally have our decline. We have to then pick up and build slowly with these other cycles. And we continue to do that relative to what stopped us, going up to higher and higher levels. And by doing that, we continue to see a projection based upon what our angle of applied force is. Now, if we go over here, let's look at an inverted triangle. So here's an inverted triangle. Now, if you're here, you don't know where this is going. But let's just say that you're right here and you say, oh, look, this triangle, here is, let's look at this impulse because we don't know the whole impulse first. So we'll just go from here to here. Here is our first impulse. I'll just delete this one for a second. So here's our first, not impulse, but here's our first force where we have our decline. So we're here on this day, and we see that we have pulled back. So we should be going bullish, but we're tipping forward. We're in a triangle. We're still tipping forward, and the triangle is coming to resolution. And it looks like even if this breaks out to go bullish, well, if it breaks out to go bullish, it's probably going to go down first. That would be the interpretation of looking at this. This might be a bullish look, although It may not be relative to this, although I guess it is relative to that one. But it may not be bearish over time. But what we're seeing here is that it is becoming more bearish, and we are in a triangle. Now, the triangle, if it compresses the forces, it could change the direction of this, because we see this compression action going on. So here we get a decline. You remember the other one, as we got positive pressure, we broke to the upside, and here, as we had tipping forward pressure, we're pushing forward on this joystick, we started going forward. Okay. Now, I had a larger line here because I wasn't using that one for this purpose. I was using over the larger cycle. This becomes very, very bullish, but this was somewhat bearish because it's tipped forward beyond the 45-degree angle. So here we go. Same concept as we progress. So you can have these smaller cycles playing out against larger cycles. So the large force could be bullish, but it's being hampered and it needs to find multiple bottoms. Now, if we take those multiple bottoms, we can also find additional things, but let's look here at this last triangle. Obviously, we come up from the large bottom. We see the first part of the triangle, very bearish. We get a lower low. We start getting more bullish. We get a slightly higher high. We get even more bullish, and then we break out and we go up. Same concept here. Here's how I can see that. If you're not sure what I mean by the angle, I mean this angle. Here's the angle of this, and this angle is lower. We were not able to reclaim this top line trend because we're not getting enough. In other words, it's a small pressure, but someone has applied just enough resistance to pull us back so that we can't get back up to there. So we're still going bullish based upon the larger trend, which I would say this is the larger trend down here, this big one. This is a smaller trend, which is much less bullish, and you can see we broke from this to a lower line, and now from here we have an even lower line where we stayed to here. And we did not attain, because if you look at it this way, this was our original line. This, after the force pulls back, our next line does not really attain this first line. So it's a pressure that's coming against us. So we get to the top, same concept. So here we are in the present day, and I was looking, and I looked in my past update video for this candle, and I showed other things indicating that we were very likely having a decline here into October the 31st. And law of vibration and all the other things I'm showing were corroborating that. But if you look at the torque cycles, we can see that we are becoming more bearish, at least relative to this incredibly bullish cycle. Here's our very bullish up. Here's our slowly we're tipping over. So if you compare this one to this one, you can see we're tipping forward here. We're tipping forward, we're tipping forward. What are we doing up here? Well, looks like we're still, if I've drawn it correctly, looks like we're still tipping forward even more. So there's a big positive cycle that's coming up, but we're still applying much more brake to this. And that's why we've gone sideways. Likewise, when we got to here, we started applying more positive pressure, which got us to a higher high. We broke out of the triangle here. That gave us a slightly higher high. We're riding above this. And again, we are tipping forward. And so what did we have? We had on the current day, this was corroboration saying, oh, we should be expecting something lower at this point. So we need to have a bullish cycle. So how would we project this now out into the future? Well, let's say that from here is our new high, that it goes to here, just to here. Let's say that's the bottom. Is that bullish or bearish? Well, that's bullish because that is a pullback on the stick. We're pulling back, so it should go up. But let's say that this goes way down here. Let's say that we get a multi-100 point decline. Well, now all of a sudden, it's no longer bullish, it's more bearish, telling us that we are in a much larger decline. But here, what I'm seeing is if I come back to this, let's say if this stretches out for a day or two, you can see what would happen. Let's say if it stretches out, it goes down lower, but takes a day or two. It goes slightly lower in a day or two, and then has a plunging low to the bottom. Do you see we would get a bullish shape? So let's say that we go to this horizontal line, right here. If we go to this horizontal line and then we pull up, you see how it would not be a bad thing to come back and retest this support line. And this would be considered just a traditional support resistance line. So if we came down to this line, we would produce a positive torque, and that would give us a bullish motion. that we would expect to follow if we get to this. And you can see this relative to the trend in all of the stuff that I'm showing you. So I hope this has given you some insight on how to see the forces that are affecting the motion of the stock market. This is a good way. This is a good way to get some clarity. If you're having trouble deciphering what's going on in the chart, just drawing these simple lines could give you some information that is very valuable. So I hope you will add this to your collection of tools and get some clarity especially if you are struggling. And as I said, many people have been writing me saying that they are struggling to understand how the market is moving. So I hope this will give you some enlightenment on what you are seeing and help you to get the correct view of how the market fluctuates. Best wishes to you in your trading.